Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
We are going to do an update to the Las Vegas real estate market. We have very cool charts to show you.
Mm-hmm.
If you like charts about Las Vegas or real estate in general, what do they have to do to see more of them?
Subscribe!
Subscribe to the channel.
All right, subscribe to the channel. Remember to like the video, share the video. And if you guys have any ideas for videos you'd like us to do, please feel free to leave those ideas in the comments. We appreciate the comments. We do read the comments. And sometimes we do your videos.
Yeah, we do. Okay, so we're just going to jump right in to the market update for Las Vegas. We'll start with Market Action Index. It is at 49. 30 is a even market. 30 below 30 is where you get to a buyer's market. I don't know why they built the index this way. It seems kind of stupid. They should have just done 50 because people are, oh, Todd, 50. 49 is below 50. That's bad. Oh, my gosh. You got to read the chart, guys, okay? 49 is not bad. 49 doesn't mean anything. It's a strong seller's market, okay? Okay. We're going to go back, and you'll see over here on the real-time market profile, all the way at the bottom, it's basically the market's been improving in the advantage of sellers. That's all that means, is who's got the power? Sellers, buyers. What are some things that will get sellers an advantage? Like, why would sellers have an advantage in a market?
So currently sellers have an advantage because there are more buyers than there are homes to purchase.
Okay.
So that means that sellers have negotiating power. There are multiple offers on properties, which gives sellers the opportunity to choose the offer that best suits their situation. And it's not always about price. Sometimes it's about terms.
Does that mean people are going to overpay on a house?
People will pay what the home is worth because the value of a home is determined by what a buyer is willing to pay and a seller is willing to accept. That's the definition of value. So there isn't a position of overpaying.
Okay. Let's jump over here and look at some of these other real-time market profile stats here. A couple of things caught my eye. Median price of new listings. Remember, these are just new listings. If you look at this, that thing's been bouncing around at like 5-something. Before, I've had people get excited. Oh, look, the listings or prices are going down because, no, it doesn't work that way. Newer listings tend to be on the lower half of the scale because listings that are lower in price sell faster. So they come on the market at a faster rate. So if you have $1 million house and two $300,000 houses, the $300 houses will sell each in 2 weeks. And then the $1 million house will sell in a month. So you've sold 2 smaller houses in the time it took to sell 1 big house. That's why you got to be careful with sometimes looking at this data because the mix of homes that sell will affect price.
Correct.
Right. Okay. Per square foot is up. Remember, it was kind of it kind of just went up and up and up and up, and then it went down a little, now it's back up. This is maybe noise. We don't know, right? We'll find out in a couple months.
Yeah. I mean, look, when you're looking at it day to day, it's going to bounce like this, but it's over the long term that you can establish a trend.
And we've got a good chart to show you, a 10-year chart. In a second, average and median days on the market are both lower. That's normal this time of year because stuff's selling.
Right.
It's kind of still the selling season. If we were to fast forward like 5 or 6 months and show you this, some of these would look different. Days on the market might be going upward a little, like it'd be longer than it was today, right? Inventory, we've got a great inventory chart to show you. Median rent, let's really quick, give us a rental update because it seems like rentals are on fire.
They are, it's interesting. We have some clients and we had 3 properties on the market at once and they all got multiple applications and one of them rented for more money than what we were asking because we had multiple applications.
And someone's just willing to pay more?
Yep.
Okay. That's a pretty hot rental market.
It is.
Okay.
So, for those of you that say, hey, the house down the street from me has been on the market for, a million days and hasn't rented. Well, okay, so what's the condition of the home? That's the first question. And then the second question is, where is it priced? I mean, if that home down the street is priced at $5,000 and the market for that type of home in that neighborhood is $3,000, then no, it's not going to rent. So the question is, what's the condition and is it priced at market value? And that goes whether it's it's for rent or for sale. Homes have to be priced at market value and they have to be in good condition in order to be attractive to buyers and to renters. Just because there's no inventory doesn't mean that people will accept a property that is not in good condition.
Yeah. Okay, here's price per square foot chart. This over the last 5 years, the dots are same day a year ago, 2 years ago, 3 years ago, 4 years ago. This is price per square foot. It's pretty interesting. Basically, 2 years ago, we said home prices would moderate. Crash Bros said 40-50% decline. They fell about 7%. Now they're back to where they were. What's interesting is back then home price, you could get an interest rate at any time in 2020 or 2021, probably a 2%, 3% interest rate. Interest rates are 7.5%.
Mm-hmm.
Homes are not like bonds where the price it's inverted compared to inverse relationship
Mm-hmm.
to interest rates. Absolutely not the case. This is proving that. This is data.
Mm-hmm.
Okay. This is signal. This is not noise. This is showing a very strong trend of interest rates being up 6.5 to 7.5% for the last really 2 years now, almost.
Right. And what we're seeing is that buyers are still out there. They're still willing to purchase homes. We are seeing obviously more cash buyers because interest rates are higher. So people would just as soon use their cash rather than pay interest. And we're seeing that, of course, more in the high end because these people tend to have cash available and have more choices. So how many of you know what maybe the highest sale price in Vegas has been? And when did it take place? Leave that in the comments real quick, and then we'll continue the video. And Todd, remind me at the end of the video to give the answer.
I'll bet you know.
I'll bet I know.
I'll bet you were the broker.
I'll bet I was.
Oh my God. Okay. Inventory. Let's look at this. When you look at this chart, it only goes back to basically 2019. Mm-hmm. This has been all the way back to the left is the last time really inventory was normal. It did in 2022 for a while, looked like it was going to get back to normal, and then it went away again. When you look at this 2021, beginning of 2022, and the last 2 years basically, this is not normal. We do not normally have 2,000 houses on the market in Vegas. Now, we're only talking about Vegas, not the whole MLS. Whole MLS is like 4,000. Okay. We actually had someone drop in the comments with the, but in 2018, Vegas was also the same as today. We're back to normal. I went and looked. 2018 was in a 15-year stretch. Mm-hmm. They picked literally the lowest possible year of inventory they could find to say, hey, this is a normal market. This is like the Crash Bros. You literally pick one stat, an outlier, and you try to make it the norm, and then you just beat on that one thing and compare it to the thing, which is absolutely completely fake. It doesn't really do anything. Inventory is super low, okay? If you're trying to make this case, Oana, what were interest rates in 2018?
2018, they were probably 4.
Yeah, 3.5%, 4%. They were pretty low. 7.5%. They're over 3% more. They're basically double now. So even though you say, hey, they're the same, we have a much different interest rate environment. Why don't we have and what were home prices back then? 30 or 40% less?
Right.
So stop comparing outliers. Look at all the data, okay? Inventory has been super low for the last 4 years. Something's going on. Okay. Now, Oana, this was a fun one. I went to so Redfin has an index. This is also the Case-Shiller index. Basically, they copied each other. I think they use the same data. And anyway, so what this shows is 2012 to 2024. It's a 12-year period, home prices in Vegas. Now, it's indexed. So it takes out the high in the spring, low in the fall stuff every year. And it takes out the fact that maybe 1 year a bunch of high-end homes hold, and then next year maybe lower-end homes hold. It indexes it all out to a more of a reasonable thing. When you look at this trend, it is pretty obvious that home prices have appreciated. Then there was a run-up from interest rates being basically nothing. And then there was a correction. And then we reverted back to the mean about 18 months ago. And you could see we're basically back on track with normal home price appreciation that we've had for the last 18 months. Oana, when you look at this chart, the Crash Bro charts, Reventure just put out a chart where literally they just took this and they distorted the prices. So it looks like home prices have like shot up, like hockey stick, like wham. It's like, oh my God, they haven't done that. Like even when you look at the chart, you can see that they intentionally spread out the price, and then they push the years together to make it look like it's distorted. But what's funny is I caught them on one of the charts because I compared the numbers, the actual numbers, and they matched over like a 50-year period, like the exact difference in wages to home prices were exactly the same. The ratio was like 4.5 to 1, right? So it was kind of funny. But what does this chart tell you when you look at it? Other than, I mean, this would never be the stock market. The stock market doesn't do this, right? What does this tell you about home prices when you look at 12 years of basically nice, smooth appreciation?
So over time, home values go up. I mean, that's pretty straightforward. Do they go up every year? No. Do they go up evenly? No. But when you're looking at it over time, it's a pretty clear trajectory.
What's really interesting about this is right where it turns and goes, home prices start going up there. Right at the bottom of that, when it starts going up, that was 2019. That was the first time the Crash Bros called for the housing crash. I don't remember which one it was, the third or fourth one. That was the big one. I actually have heard stories of people that sold their house in 2019. Oh my God, I'm getting out of this. It's going to crash.
Right. I mean, I worked with a lot of people that had sold their homes in 2019 and went into rentals.
Huge mistake. They just cost themselves 6 figures. If you make $50,000 a year, how much do you put in the bank, do you think, at the end of the year, honestly?
Not much.
After expenses.
Not much.
If you're lucky, you can save $5,000 after taxes and everything,
I
right?
can't even imagine that because, I mean, the cost of living is, I mean, it gets...
If you sold your $250,000 house in 2019, it's probably worth $400,000 today.
Absolutely.
You gave up $150,000 of equity because some idiot on the internet, not us, told you, sell your house before the market crashes, and then you've lost out on all the benefits. Plus, it would have been tax-free money, meaning that $150,000, if you'd have sold your house in the future. We're not telling you should try to time the market buying and selling. But now the complaint I see is people say, oh, Todd, I can't afford to get back in. I mean, when I sold my house, I got my money, I made a little, but I thought I was going to, a couple years later, buy a house even cheaper. And now I can't afford it because interest rates are too high and prices are too high. They may not ever buy now.
Well, ever is a long time, but it's certainly... they set themselves back because it just gets more difficult when you get out of the housing market.
Right.
There are very few times in history when it was easier to get back in than it was the first time when you got in. So for the most part, it's easier if you have a home and either buy another home or sell that home and immediately buy another home. If you're out of the housing market for any length of time, generally it's harder to get back into the housing market because you have to overcome that hurdle of down payment and higher interest rates and higher payments and that sort of thing.
The thing I always hear about California when people say, how are these Californians how do they afford these homes in San Diego? Like, how can a median home be $900,000? Well, remember, they moved there from the Bay Area. And maybe they sold their house in the Bay Area in, San Mateo. They work for a tech company, and their tech company relocated or opened an office in San Diego. And they made $700,000, $900,000 on the house that they maybe had owned for 10 years or whatever. And they just moved the equity down to San Diego. So you're like, how can they afford? They're already in the market. Right. They're in the market. They have the money. Yes, it's very difficult. I'll be the first one to say, grew up in a family we basically lived paycheck to paycheck. My parents had not been paid every 2 weeks. We would have run out of money super fast growing up. It was very stressful growing up in that environment. And although we did most of the time, we didn't live in base housing. We always bought a house, and they always had house payments to make and everything. So I'm very well aware how difficult it is for average income earners to just be able to find room in their budget to go buy a house.
Right.
But like Oana said, it's painful at first generally, but once you get in and you're in it for a while, and then remember the thing too is your payment's fixed, and everyone else, rents are going up and going up and going up. And then after a while, it may take 3 or 4 years. You go, hey, now I'm doing better. Or you refi, and all of a sudden you're like, oh, I'm way better than I would pay in rent.
Right.
And then you're just winning the rest of the time.
Right. So, kind of Todd just said, these people, no matter where they're coming from, whether it's in the same market, from a different market, when they're buying homes, they're just moving equity from one home to another. So it's not like they're having to start from scratch. If it's a $900,000 house, they're not having to get a mortgage for that full amount. They're moving their equity from the previous home to the new home. So now their payments are not that unreasonable.
Yeah. What is your forecast? Would you say for the rest of the, let's say interest rates don't really do that much. They just kind of stay where they are.
Yeah, I mean,
what do we see for the next year between now and next spring?
So I think the home prices, I don't expect the home prices are going to shoot up, but I don't expect for them to go down. I just expect for them to kind of keep doing what they're doing, which is going up a little bit at a time. But over the long haul, it's a lot.
Okay.
When you compare them to a few years ago. So I do expect home prices to, depending on the market, certainly in Vegas, I think home prices are going to probably continue to go up a little bit, not dramatically, but a little bit. It's dramatic to you if you're the home buyer, but not a whole lot. It's really interesting because, so long as we have more demand, this is going to continue.
Right.
And home sellers are not ready to get off the fence and sell their homes. So long as that happens, inventory is not going to increase dramatically. Home builders can't keep up with the demand. If you're thinking that we don't have the population to support the number of homes that are being built, think again. Our population is growing. It's not growing through birth. It's growing through immigration, but nevertheless, it is growing. So that means that we continue to need more housing throughout the price points, right? So if you're thinking, well, immigrants can't afford on the high end, well, I would agree with you, most cannot. But as they pick up the lower end, everybody kind of moves up a little bit. So homes throughout the different price points are selling.
We've added 7 or 8 million people in the last year between births and immigration. We've not built anywhere close to that. I think they built, ready for this, 600,000 or 700,000 new homes, permits, and we've had about 125,000 homes gone because homes just go away because
Right.
they get destroyed. They have a fire, they have a natural disaster, a river floods, and that's about the normal number. So, we're net adding 500,000-600,000 homes a year. Yes, we have apartments, but everyone doesn't want to live in an apartment. American dream is to live in a house.
Right.
Wanna tell them a purchase price of the home, highest price home that was sold in Vegas this year.
Okay. So, how many of us remember when luxury in Vegas was maybe anything over $300,000-$400,000?
Oh my God!
Okay.
I bought a Toll Brothers house for ready for this. The base price was $345,000. A Toll Brothers, a beautiful home. $345,000 was the base price.
So Todd was talking about outliers earlier. So here's an outlier. I was not the agent, so I'm going to make that very clear. I was not the agent. I had nothing to do with this.
You're the broker of the company.
Yeah, but I had nothing to do with this. So the most exciting sale last week in Vegas was a home for, drum roll please, $35 million.
Billion?
$35 million, which is a lot of money in any market. So that's kind of exciting, kind of cool.
That's a lot of money.
It is a lot of money. It's a lot of Cheetos.
Were they super famous people, or do we know?
No.
Oh, this average people probably.
I wouldn't say average people. They're just not people that anyone would know.
Right.
They're just people.
Right.
So.
That's crazy.
Yeah, pretty cool.
Okay.
So for those of you that think that, well, Vegas is a low-end market, not so much.
Not anymore. Oh my God, there's no, not anymore.
So what's kind of interesting is when you look at different zip codes, luxury is a different amount of money. So that's one of the things that we were talking about, is that depending on the zip code, luxury could start at $6.5 million in Vegas. Start at $6.5 million for luxury, which means everything below $6.5 million would be not luxury. So it's interesting. What defines luxury as the top 10%. Okay?
Okay.
So once we define luxury as the top 10%, then you get an idea of where homes are selling. So
it's about 1.3, 1.4 here.
Right.
Right.
So,
about 10% of all homes are over 1.3 million.
So yeah. So it
which
depends.
10 years ago was San Diego.
Mm-hmm. So it depends on your zip code. It could be, 500,000, 700,000, 900,000, whatever. So it's kind of interesting. It's kind of a fun stat. Right now, because inventory is so low, that means that there are very few sales. So you might just have like one sale, or you might just have a very few sales, and that kind of skews that number, right? So this is just a fun statistic. We don't have enough sales in our marketplace right now to make this a meaningful number. It's just a number for entertainment.
Sweet.
Okay?
Yeah.
So anyway, hope you had fun. Remember, we are not just your YouTube friends. We are also real estate practitioners. So if you have a property to sell, or if you'd like to purchase something, please reach out to us and we would be happy to help you, whether it's here in Las Vegas or anywhere else in the country. We will find you a great agent that we work with, and we will take good care of you. We appreciate you watching. Please like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.